90% of our revenue today is coming in from our undisclosed U.S. customer. We've hit all the milestones to date in our first program of work. We've signed a second contract, a follow-on, which takes us through calendar 2019. So we're very pleased with where we're at. The customer is very pleased, which is really important. On the second program of work, which was a next generation materials, we've delivered everything that we needed to deliver for that contract. So we're on track. So we've seen display, as you say, has taken longer to come to the market. We're now seeing the fortunes waxing rather than waning. And we've done a lot of work over the last 6 months to pivot our strategy to what we call a dot-only strategy, focusing very heavily on developing and producing the highest quality red-green dots available in the market, and then working with integrators. These are film producers, ink producers, photoresist producers to service the market alongside our licensees, Dow, DuPont, and Merck. So we're quietly confident about display starting to come through. Life sciences continues to make great progress. We've successfully had our material confirmed as non-toxic through a CRO called Covance, and continued studies with Charles River Lab are proving to be very good materials in terms of imaging or improving the imaging of certain cancers. On lighting, making progress on lighting, still early stages. So the big technical breakthroughs that we've made are with the U.S. corporation, U.S. customer in the electronic space, where we've successfully scaled up these new materials, had those materials validated all the way through the supply chain, and then managed to design and build a whole new factory, never been done at this scale before, which we have successfully built, designed and built the tools. Those tools have been put in place. Those are now being commissioning, and we're going through, once they are commissioned, we will go through a period of validation, ensuring that what we produce on large scale out of Runcorn matches what we've been able to produce out of Manchester on the pilot plant. We spend a lot of money on developing technology and then protecting that innovation with patents. And we're now north of 750 patents, or 730, excuse me, patent applications, really, as you say, the world leader in this space. We are seeing a lot of inbound inquiries for our work on infrared materials. We're seeing a lot of inbound inquiries on display materials for next-gen display, meaning OLED, quantum dot, hybrid systems. So the reason people are coming to us is because of our well-developed patent portfolio and our position, and our ability to really innovate, bring new materials to the market, scale those up, and produce at a level that allows industry to incorporate them into their products. Our objective and task for calendar 2019 is to get the Runcorn production facility fully commissioned and validated so the product coming off matches the product that's been validated out of Manchester. Today, we don't have visibility on when commercial orders are going to flow. That is really up to the end customer to decide when they're going to start to deploy the technology in end products. But we're working with our supply chain partners to ensure that by the end of this year, the technology is ready to go.
H1 this year was transformative compared to last year. We did 3.2 million of revenue this year and only did 200,000 last year. So it's a huge increase. 90% of that revenue this year all flowed from the US customer, all based on service revenue and achieving milestones. As Michael's already alluded to, we achieved all of those in full. So top line revenue completely dominated by the US customer operating in the electronic sector. And it's really then the drop through of that extra 3 million of revenue at attractive gross margins that has improved the operating loss, or that's narrowed by 40%, and also that's improved our cash flows by similar amounts over the same period. The contract extension that we signed in January that runs through to December 19 is worth about £8 million. There's just over £1 million of that as capital, so that leaves about 6.8, and that roughly splits half and half between the second half of this financial year, running through to July 17, and then the first half of next financial year running through to December 19. And that's why we've got the confidence that our board expectations for this year's revenue are fully underpinned because of that contract being in place. It also gives us an opening order book going into next year of over £3 million. And again, that's one of the first times in Nanoco's recent history that we've been able to talk positively about going into a new financial year with order coverage already in place for a significant portion of next year's revenue. We've just disclosed 6.2 million of cash on the balance sheet at the end of January, with the benefit of that contract extension that's in place, but also with the benefit of some R&D tax credits from UK government. We actually expect the next 11 months from January all the way through to December to be broadly cash flow neutral. So we would expect by December 19 to have a similar amount of cash on hand as we do at the end of January. There'll be movements from month to month because of working capital variations, so it may be slightly different figure at the end of the financial year, but by the end of the calendar year, as I say, we would expect our cash flow to have been broadly neutral for these 12 months. So if you take the foundations we got today, we've got 730 patents either granted or pending. We've got 2 production facilities, one that can be focused around display, one that can be focused around electronics materials, and we've also got people and know-how in the business. Those 3 foundations, if we put volume on top of that, whether it's through service income in the short term or production volumes in the medium term, you get very attractive drop-throughs to the bottom line. As that volume builds, whether it's with more material on the electronic side or on the display side, clearly that continues. But it is worth saying that actually, even if we just got the minimum order quantity for the electronics side of things, that would take the business close to a break-even position. So short-term opportunity to get to break-even, add more volume, and you'll get strong drop-through to the bottom line and also to cash generation.